There's a $50 trillion wealth transfer happening right now, and you're on the losing side. Not because you're bad with money, not because you made wrong decisions, but because the system is designed to extract wealth from the middle class during every crisis and concentrate it at the top. This isn't conspiracy, this is documented economic history. And it's happened the same way in every major crash. 2008, the middle class lost $16 trillion in household wealth. Foreclosures, job losses, forced stock sales, but the top 1% they gained? They bought foreclosed homes at 30 to 50% discounts. They bought stocks at the 2009 bottom when the S&P hit 666. And when assets recovered to normal prices by 2013, that wealth didn't return to the people who lost it. It stayed concentrated at the top. $16 trillion transferred from the bottom 90% to the top 1% in a single crisis. 2020 pandemic crash. The middle class lost jobs, businesses, savings. 22 million unemployed in 2 months. 60% of small businesses permanently closed. People forced to sell stocks during the March crash to survive. But billionaires, they added $5.5 trillion to their net worth in 1 year. Jeff Bezos gained $70 billion. Elon Musk gained $140 billion, the fastest wealth concentration in modern history. And now 2025, Warren Buffett is sitting on $325 billion in cash, the largest capital position ever assembled. Private equity firms have raised $2.5 trillion in dry powder specifically for the coming crash. They're not just predicting a crash. They're positioned to profit massively from it. And the middle class, the average American, is more leveraged, more exposed, more vulnerable than at any point in history. When this crash comes, and every indicator says it's 6 to 18 months away, we're looking at a $30 trillion or larger wealth transfer, the biggest in human history. And you need to understand this isn't random. This isn't market forces. This is how the system works. Let me show you the mechanism, how wealth transfers during every crisis, who designed it this way and why you're the target. The 2008 financial crisis destroyed $16 trillion in household wealth. That's the official number from the Federal Reserve. Middle-class families saw their net worth collapse from a median of $140,000 to $82,000. 41% gone. 10 million foreclosures. Millions of jobs lost. Retirement accounts cut in half. But here's what they don't tell you. That wealth didn't disappear, it transferred. By 2006, the housing bubble had reached extreme levels. Home prices had doubled in 5 years. Mortgage lenders were giving loans to anyone. No income verification, no down payment. Adjustable rate mortgages with teaser rates that would triple after 2 years. Stated income loans, where borrowers wrote down whatever income they wanted. It was insane, but everyone was making money, so nobody questioned it. The wealthy started exiting in 2006 and 2007. Hedge fund managers like John Paulson and Michael Burr analyzed the mortgage data and realized it was garbage. They saw borrowers who could never afford payments once rates reset. So they exited, sold properties, reduced stock positions, moved to cash. But the middle class was told housing never goes down. Buy as much as you can afford. Use your home equity like an ATM. Real estate agents, mortgage brokers, financial advisors, everyone pushed people to maximize debt. The middle class loaded up right at the peak. Then 2007, mortgages started defaulting. By 2008, the entire financial system was collapsing. Middle-class families with adjustable rate mortgages saw payments double or triple. A family paying $2,000 a month suddenly owed $5,000. Foreclosure. They lost the house and all equity. Credit destroyed for 7 years. The stock market crashed. S&P 500 fell from 1,500 to 66.57% declined. Middle-class families watching 401ks get cut in half, panicked and sold at the bottom, locked in massive losses. Millions lost jobs. Unemployment spiked to 10%. When you lose your job, you're forced to liquidate. Sell stocks to pay bills. Tap the 401k early burn-through savings. This is forced liquidation. The middle class wasn't choosing to sell at the bottom. They were forced to buy unemployment, foreclosure, margin calls, survival. But the wealthy had cash. Warren Buffett bought Goldman Sachs and Bank of America when nobody else would. Got preferred shares, paying 10% dividends plus warrants, terms that guaranteed profit. Private equity firms bought entire portfolios of foreclosed homes. Blackstone bought 40,000 houses. Invitation Homes bought 80,000 at auctions for 30 to 50 cents on the dollar. Houses families paid 300,000 for bought for 150,000. Hedge funds bought distressed securities for 20 cents on the dollar that would recover to par guaranteed returns. Then the Federal Reserve intervened, dropped rates to zero, printed $4 trillion, and bought bonds and securities to stabilize markets. The money flowed into assets. Stocks recovered. Real estate recovered. By 2013, back to all-time highs. Crisis over for asset owners, but the middle class that sold at the bottom missed the recovery, no capital left. The homes they lost became rental properties owned by private equity, rents higher than their old mortgage payments, permanent renters in homes they used to own. The stocks they sold at 666 went back to 1,500 without them. $16 trillion transferred from middle class to the top 1%. Not because the wealthy were smarter, because they had cash when everyone else was forced to sell, because the Fed printed money that inflated assets they owned, and because the system is designed to transfer wealth exactly this way. March of 2020, COVID hits. Markets crashed 35% in 3 weeks, fastest collapse in history. 22 million Americans lost jobs in 2 months. Service economy shut down. Restaurants, bars, hotels, airlines, retail, entertainment, all closed. Small businesses shut down and 60% never reopened. These weren't failing businesses. Profitable enterprises destroyed by lockdowns. Owners lost everything, years of equity gone in weeks. The middle class faced immediate crisis. No income, bills still due. What do? You liquidate. Sell stocks to generate cash, drain savings. Tap 401ks, early paying penalties, force liquidation at scale. But the wealthy weren't selling, they were buying. Billionaires added $5.5 trillion to their net worth in 2020 alone during a pandemic that killed hundreds of thousands. Jeff Bezos gained $70 billion as Amazon stock exploded. He made $70 billion while small retailers collapsed. Elon Musk gained $140 billion. Tesla went from 400 to 3,750% gain in 9 months. Not because Tesla became 7 times more valuable, because the wealth transfer mechanism moved middle-class assets to billionaire balance sheets. Mark Zuckerberg gained $42 billion. Sergey Brin and Larry Page gained $35 billion each. Combined billionaire wealth went from $3 trillion to $8.5 trillion. $1.5 trillion in added wealth. Not because they created value, because the system transferred wealth from forced sellers to positioned buyers. Like when markets crashed in March, middle-class investors panic sold. S&P dropped from 3,400 to 2,200. 35% in 3 weeks felt like the world ending. Hospitals overwhelmed, death tolls climbing, economy shutting. Nobody knew how bad it would get. Middle class sold everything, moved to cash, terrified. But billionaires and institutions bought everything the middle class dumped. They bought knowing the Fed would intervene, and the Fed did. Jerome Powell announced unlimited quantitative easing. They would print infinite money if necessary, printed $6 trillion, largest money printing in history. That money flowed into asset prices. Fed bought corporate bonds, junk bonds, bond ETFs, mortgage securities, pumped $6 trillion into financial markets. Stocks recovered the entire loss in 4 months. By August 2020, back to all-time highs during a pandemic, during lockdowns, during mass unemployment. Why? Because the Fed printed $6 trillion and funneled it into asset prices. But the middle class that sold in March missed the entire recovery, sitting in cash, scared, unemployed, watching billionaires get richer. The real economy where middle-class people live was collapsing. But the financial economy where wealthy people hold assets was being propped up by the Fed. The Fed doesn't care about your job. They care about asset prices. Because asset prices determine wealth of those who control the system. $5.85 trillion transferred in 1 year. Fastest wealth concentration in modern history. Same pattern as 2 or 8. Same mechanism, and it's systematic. Every crisis follows the same 5 phases. This is an accident. This is design. Phase 1, the bubble. The Federal Reserve creates easy money conditions. Interest rates drop. Money cheap to borrow, credit easy. This inflates asset prices. Stocks rise year after year. Real estate rises. Everyone feels wealthy on paper. The middle class is told this is the time to invest. Buy stocks, buy real estate. Leverage up, don't miss out. Financial advisors say be fully invested. Real estate agents say buy now. Media runs stories about people getting rich. Everyone's bullish. The middle class loads up, buys stocks at all-time highs, buys houses at peak prices with maximum mortgages. Alan, fully invested, many leveraged, right at the top. Meanwhile, the wealthy exit. They see valuations are extreme. Price-to-earnings ratios at historic highs, leverage everywhere. They know every bubble bursts, so they sell systematically over 12 to 18 months. Warren Buffett builds cash, sold over $100 billion in stocks. Corporate insiders sell at record levels. Private equity locks in profits. Raises funds but doesn't deploy, sits on cash waiting. Smart money exits while middle class buys. This is phase 1, middle class fully invested. Maximum leverage, peak exposure. Wealthy convert to cash and wait. Phase 2, the tightening. The Fed raises interest rates. Money becomes expensive. Debt burdensome. Adjustable mortgages reset at higher payments. Corporate debt refinances at higher rates. Asset prices stop rising. Euphoria fades. Cracks appear, but the middle class doesn't see danger. Told it's a healthy correction. By the dip, they stay fully invested, even by more, averaging down, believing the system will recover because it always has. But the wealthy aren't buying dips. They're building short positions. Put options, VIX calls, credit default swaps, buying insurance, paying premiums, positioning to profit. When phase 3 arrives, phase 3, the crash, something breaks, a bank fails, a company goes bankrupt, a crisis erupts. The trigger doesn't matter. The system is over-leveraged and fragile. When the trigger hits, it cascades. Markets crash 30, 40, 50%. Real estate plummets, credit freezes. Banks stop lending, forced liquidation begins. Middle-class families with margin debt get margin calls. Must deposit cash or brokers sell their stocks. Most don't have cash, forced liquidation. Families with mortgages they could barely afford lose jobs, can't make payments, foreclosure, forced liquidation. Families watching 400 collapse, 50% panic, sell everything to stop the bleeding, forced liquidation. At every level, the middle class is forced to sell at worst prices, not because they're stupid, because they're trapped by debt, fear, unemployment, margin calls, foreclosure. The system is designed to force liquidation, and who's buying? The wealthy who built cash in Phase 1. Phase 4, the transfer, middle class selling everything. Wealthy buying everything, got foreclosed homes at 30 to 50% discounts. Private equity buying thousands of properties in bulk. Stocks at 50 to 60% off peak prices. Buffett buying quality companies at valuations he hasn't seen in decades. Distressed businesses for pennies on the dollar. And they dictate terms because they're the only ones with capital. Everyone else desperate. Buffett buys Goldman Sachs, and Bank of America gets preferred shares with 10% dividends plus warrants, terms that guarantee profit. Private equity buys foreclosed homes in bulk, 30 to 50% of previous value. Hedge funds buy corporate bonds for 20 cents on the dollar that will recover to par. This is the transfer. Wealth moving from forced sellers to buyers with capital. Every asset the middle class liquidated. The wealthy accumulate at generational low prices. They'll hold 5 to 10 years. Phase 5, the recovery. The Federal Reserve intervenes always. They have no choice. Rates drop to zero. Quantitative easing, money printing. Trillions flood the system. Fed buys bonds, securities, pumps liquidity into markets. Money flows into asset prices. Stocks recover from the bottom, climb 30, 40, 50% first year, keep climbing 5 to 10 years, back to normal or higher. Real estate recovers within 2 to 5 years. Assets back to normal valuations. Wealthy who bought at the bottom doubled or tripled investments some 5 to 10 times. Massively richer than before crisis, but middle class that sold at the bottom missed recovery. No capital to deploy, still rebuilding. Wealth that transferred never comes back, stays concentrated at top forever. Gap between rich and poor wider than before. Wealth inequality increases after every crash. Not despite the crash, because of the crash. That's the mechanism, that's the purpose. This isn't capitalism, this isn't free markets. This is designed. The Fed creates bubbles with easy money in Phase 1. Bubbles burst when they tighten in Phase 2. Crash in Phase 3 forces middle class liquidation. Phase 4 is transfer at fire sale prices. Phase 5 is money printing to reinflate assets the wealthy now own. Wealth transfers, gap widens, cycle repeats. 1987, 2000, 2008, 2020. Same 5 phases, same mechanism. And it's happening again right now. We're in late Phase 2, right now approaching Phase 3. The bubble ran 2020 to 2022. Fed dropped rates to zero. Printed 6 trillion assets exploded. S&P went from 2,200 to 4,800. Doubled in less than 2 years. Real estate up 40%. Houses selling hundreds of thousands over asking. Bidding wars, total mania. Middle class bought in, stocks at record valuations. Homes at record prices with maximum mortgages. Total household debt at all-time highs. 38 trillion margin debt at record levels. Middle class more leverage than 2008 or 2000. Fully invested at the peak. Meanwhile, wealthy exited 2023 and 2024. Buffett sold over $100 billion in stocks. Cash position now $325 billion, largest in history. He's waiting to deploy at crash prices. Jeff Bezos sold $13 billion in Amazon. Systematic liquidation, Mark Zuckerberg sold billions in Meta. Jamie Dimon sold for first time ever as CEO. Insider selling at 2007 levels right before last crash. These people see real earnings, real problems before quarterly reports. They're selling. Smart money exited. Phase 1 complete. Phase 2 started 2022. Fed raised rates from 0 to 1.5% in 18 months. Fastest since the 1980s. Mortgages went from 3 to 8%. Housing became unaffordable. Corporate debt tripled in interest costs. Commercial real estate financed at 3% now faces 8 to 9% refinancing. The math doesn't work. Owners defaulting. Brookfield Asset Management defaulted on 2 LA towers worth over $1 billion. One of the largest real estate companies, and they're walking away. Over $2 trillion in commercial mortgages. Mature 2025 and 2026. 40% can't refinance. That's $800 billion in defaults. Regional banks hold those mortgages. Regional banks already failing. Silicon Valley Bank collapsed March 2023. Second largest bank failure in history. Signature Bank failed same week. First Republic failed May 2023. New York Community Bank nearly failed early 2024, and we're not even in recession yet. Unemployment still 4%. When recession hits, dozens of regional banks fail, but middle class hasn't panicked. Told its transitory soft landing market held up through 2024. They believe it's fine, staying invested, buying the dip. Exactly what middle class did in 2007, pattern identical. Phase 3 coming within 6 to 18 months. Every indicator says so. Yield curve inverted 2022, normalized 2024, predicted every recession since 1950. Lag time is 12 to 24 months. We're at month 18 Buffett indicator at 185%. He said anything over 120% is dangerous. We're 65 points above danger threshold. Commercial real estate defaults cascading 2025 and 2026. Regional banks will fail in clusters. Unemployment will spike from 4 to 12 to 15%. 7 to 8 million lose jobs. Forced liquidation begins at scale. Crash triggers everywhere. Commercial real estate, regional banks, corporate debt crisis, overleveraged consumers with 40 trillion in debt. Geopolitical risks, any could be catalyst, but catalyst doesn't matter. System is fragile, leverage extreme. Valuations unsustainable, transfer mechanism ready to activate. Phase 3 will hit hard, 50 to 60% stock decline likely. Unemployment spikes to 12 to 15%. Regional banks fail in clusters, FDIC overwhelmed. Commercial real estate collapses, middle class panics, margin calls forced selling, job losses forced selling, foreclosures forced selling, forced liquidation at worst prices. Phase 4 will be largest transfer in history. Middle class has 50 trillion in stock wealth. When markets crash, 50 to 60%, 25 to 30 trillion disappears, but it doesn't disappear. It transfers to Buffett with 325 billion waiting to private equity with 2.5 trillion dry powder. To hedge funds with massive shorts that profit on way down, they'll buy everything. Foreclosed homes at 30 cents on the dollar, stocks at half price, distressed businesses, everything at fire sale prices, hold 5 to 10 years while assets recover, double or triple wealth. Middle class wealth transfers to their balance sheets. 30 trillion or more, largest wealth transfer in history. Then phase 5, Fed intervenes, drops rates to zero, prints 10 or 20 trillion. Money flows into assets wealthy bought at bottom, reinflating prices. Wealthy, massively richer, middle class, missed recovery, rebuilding from job losses, wealth gap wider than ever. Why would the system work like this? Because it's not designed for you, it's designed for them. The Federal Reserve was created in 1913 by banks. J.P. Morgan, Rockefeller interests met secretly on Jekyll Island in 1910 and designed the Fed, then lobbied Congress. Stated purpose is price stability and employment. Actual function is preserving wealth and power of the financial system. When banks make bad loans and face collapse, the Fed bails them out. 2008 bailed out every major bank. Trillions in loans and guarantees. Citigroup, Bank of America, Goldman Sachs, Morgan Stanley, all saved but not homeowners. 10 million foreclosures. Families lost homes. Banks saved. Why? Because banks own the system. They created the Fed. Fed serves them. When markets crash, threatening the wealthy, Fed prints money to reinflate asset prices. Every crisis, same response. 1987, Greenspan printed 20,000. Same. 2008, Bernanke printed 4 trillion. 2020, Powell printed 6 trillion. Save asset prices. Because people who own assets control the system. They fund campaigns, sit on Fed boards. New York Fed boards, staffed by bank representatives. The institution's being regulated. Regulatory capture. System regulates itself in its own interest. But the middle class has no power. Don't fund campaigns, don't sit on Fed boards, don't control policy. So when system needs to reset, when debts need liquidation, when assets need to correct, burden falls on you. You lose your job, lose your home, forced to sell stocks at bottom. You bear the cost. Wealthy, buy what you sold at fire sale prices. That's not a bug. That's the feature. Look at 2008. Fed and Treasury bailed out banks but not homeowners. Gave trillions to institutions through TARP loans. QE, but 10 million families lost homes. Why not bail out homeowners? Government could have bought mortgages at full value, restructured, so families stay in homes. It would have cost less than bailing out banks. But they didn't. Why? Because that prevents the wealth transfer. If homeowners stay in homes, no foreclosures. Private equity can't buy at 30% discounts. Transfer doesn't occur, so bail out banks. Let homeowners fail, let foreclosures happen, let private equity buy distressed. Transfer occurs. That's not incompetence. That's design, purpose of crisis. From systems perspective is liquidate middle-class assets, transfer to wealthy at discount prices. Policy designed to facilitate that. Look at 2020, Fed printed 6 trillion. Where did it go? Not to 22 million who lost jobs. Not to small business owners who lost everything. Some stimulus checks and PPP loans. Families got $200, but vast majority went into financial markets. Fed bought bonds, securities, corporate bonds, junk bonds, pumping liquidity into asset prices. That benefits who? Asset owners, the wealthy? Top 10% own 89% of stocks. Top 1% own 54%. When Fed prints money and stocks go up 40%, who benefits? Billionaires, not middle class. They got $200 one time. Billionaires got 5.5 trillion in asset inflation. That's where Fed money went through financial markets. System working as designed, crisis hits. Middle class liquidates. Wealthy buy Fed prints. Assets recover, wealthy much richer. Middle class left behind. Wealth gap widens, system more concentrated. That's not failure, that's success from systems perspective. The crash is coming to 18 months. Commercial real estate defaults through 2025 and 2026. 2 trillion can't refinance, owners walk away. Defaults cascade. Regional banks fail in clusters, dozens. FDIC overwhelmed, some depositors take losses. Stock market crashes 50 to 60%, maybe more. 30 trillion in household wealth evaporates. But it doesn't evaporate. It transfers to Buffett with 325 billion waiting to private equity with 2.5 trillion dry powder. To hedge funds with massive shorts, they'll buy everything. Your foreclosed home at 30 cents on the dollar. Your panic sold stocks at half price. Your 401k positions, everything at fire sale prices. Hold until Fed prints 20 trillion to reinflate. Wealth that disappears from your balance sheet appears on theirs. $50 trillion wealth transfer, you're the target. System designed to extract from you concentrate at top. But you can see it coming. Position differently. First, hold more cash. 20 to 30% to portfolio in cash or treasury bills. Yes, might miss gains if markets rise 6 to 12 months, but when crash comes, you have capital. Capital during crash is power. Buy assets at 50 to 60% discounts generates far more wealth than holding stocks down 50% with no capital at bottom. When everyone forced to sell, you're the buyer. That's how you switch sides. Second, buy protection. Put options on SPY expiring 6 to 12 months. Strike prices 10 to 20% below current. Pay 1 to 3% of portfolio. If markets crash 50%, those puts return 5 to 10 times what you paid. If markets don't crash, lose the premium. That's insurance. Bill Ackman turned 27 million into 2.6 billion in March 2020 with this exact strategy. 96 to 1 return. The profits funded buying at the bottom. That's how the wealthy do it. Profit on the way down, buy on the way up, double profit. You can do a smaller version of the same strategy. Most importantly, when the crash comes, when markets are down 50%, when unemployment is spiking to 12%, when regional banks are failing every week, when everyone is terrified, selling everything, when the media predicts the end of capitalism, when your emotions scream sell and hide, ignore those signals. Have a list ready. Quality companies you want to own. Strong balance sheets, low debt, essential products, competitive advantages, Apple, Microsoft, Google, Johnson & Johnson, Procter & Gamble, Visa. Companies that survive and thrive long term. Buy them at fire sale prices. You don't need to catch the exact bottom. Nobody can. But when stocks are down 50 to 60% and fear is at its maximum, start buying. Scale in over weeks and months. That's phase 4. That's when the wealth transfers. If you have cash, if your protection paid off, if you have the psychological fortitude to buy when everyone is selling in terror, you position yourself on the other side of the transfer. Become the buyer instead of the forced seller. That's the only way to avoid being the target. The pattern is clear. The mechanism is documented. It happened in every major crash: 1929, 1987, 2000, 2008, 2020. The same 5 phases, the same mechanism is happening again right now. In 2025, the wealthy have exited. 325 billion in Buffett's cash, 2.5 trillion in private equity dry powder, record insider selling. They're positioned. The middle class is fully invested, 40 trillion in debt, all in at the peak, maximum exposure. 50 trillion is about to transfer from forced sellers to positioned buyers. The largest wealth transfer in history. The question isn't whether it will happen. History says it will. The question is, will you recognize it and position differently than the masses, or be one of the millions who loses everything, forced to sell at the bottom, transferring your wealth to someone who saw it coming and was ready? The system isn't designed for you. It's designed to extract from you during every crisis. But knowing that, seeing the pattern, understanding the mechanism, gives you a chance to avoid being the target, maybe even to position on the other side. The transfer is coming. The only question is which side you'll be on.